All right. Well, thank you, Andrew, for that. That was the most exciting intro to a custody panel, I think, in the history of crypto. So thank you for that. So thanks everyone for coming out. Obviously, as Andrew mentioned, it's a really important topic. This is kind of the basic blocking and tackling of crypto and crypto adoption. And as the market matures globally, custody is becoming just a much more salient issue. So that's why we're tackling it here at Invest Asia today. So I wanted to kind of, we have a good mix of an Asian-based custody provider and a couple of US-based custody providers here on stage today. So I was hoping to get basically an overview, kind of comparing and contrasting the differences between the Asian and North American crypto custody markets. What are kind of the big distinguishers or the big similarities that you guys see in your day-to-day? Vincent?
Well, I feel that Asia and North America, the similarity is that we all want to be properly regulated. We want to bring on institutional clients. I think that's really the key to growing this industry.
Pete?
I think, thank you, and thanks for having us. It's great to be here. In a lot of ways in the US, some of the war's already been won in terms of the institutionalization of crypto and of custody. You've got some firms that have been significant leaders in exchanges and in providing a means by which consumers in particular access the market. Coinbase has done an amazing job at that. You've got some asset gatherers like Grayscale who've gone a great distance to kind of establish what ETNs and ultimately ETFs are going to look like. VanEck's done a lot of work there as well. And now we're seeing some very large brand names like Bakkt and Fidelity show up and add some brand to that. So it's very quickly feeling like, and we think there's a role for us to play that's significant, but it's very quickly feeling like the business in the US will look very much like the custody business for other assets. Asia is very different than that. Asia is a business that has demographic realities that are unique. You've got 60% of the world's population here. You've got a culture that is very comfortable with risk. I lived here for a while and I had a job at UBS in the FIC business at UBS, and the first thing I looked at was what's the business around Asia, what do we do with clients, and what are the different product mix, what's the different product mix and how does that work? And what shocked me was the use of structured product by Asian families and individuals, even 12 years ago, was one of the biggest pools of use of derivative products in all of UBS. So UBS would call all these clients institutions and they'd sell all this product into private banks, and it was all structured product that was then repackaged and on-sold to retail. So it's a retail environment that really accepts risk and is comfortable with risk. And then lastly, we could debate all day about the importance of crypto as a disruptor for places like the US. But the reality is, in my opinion, where crypto's use cases are really truly in need are in parts of the world like Asia. Southeast Asia alone has 600 million people, 60% of which don't have bank accounts, and 95% of which don't have credit cards. So just the use cases alone for what crypto can solve are absolutely more significant here than anywhere in the world.
Sure. Sam, for Coinbase, what's the biggest difference between you guys have been primarily North America based, you're doing more in Asia. What's the biggest difference you guys are encountering on the custody front?
I think the biggest difference, certainly securing crypto is a pretty foundational concept. I don't think how you're going to do that is going to change much market by market. But the clients and the people that are sort of driving the need for these services is where we've picked up on some key differences. So Pete started to touch on this. In the US, you have established hedge funds, you have asset managers, asset gatherers like Grayscale. Over here, it's really family offices and high net worths that are currently driving, I think, a lot of the demand for custody services. We haven't seen a lot of licensed asset managers or sort of similar looking hedge funds yet across the region. I expect we'll start to see some of that soon, and that will start to maybe make some of the demand look a little more like it does today in the US, but it's at a different sort of point in its evolution right now.
Sure, and then Pete and Sam, just maybe comment quickly on what's really driving this kind of pivot from North America-based service providers into the Asian market? Is it just simply this is where the largest customer pool is?
Yeah, I mean, I think, well, first of all, we all have a need to be global businesses, right? We're talking about a global disruption. For BitGo specifically, our business is a business that's been kind of a software provider and custodial and qualified custody provider. So the exchange business in Asia is meaningful. We saw that in the first presentation today. Those are a lot of our customers. And I just expect that and I think Sam makes the right point. I think that as this business matures and as this region matures, you're going to have the double whammy of a groundswell of kind of retail and consumer demand because crypto solves a real need, and the onboarding of, so not only a consumer universe that's significant, but an institutional universe that comes online in a pretty big way. It's an exciting place to be.
Sure. Sam?
In the US, I work at Coinbase, and I don't think I've ever gotten a targeted ad for some other crypto company. I've received dozens since I've been on the ground here in Singapore in the last few days. I saw a bunch of billboards across Tokyo. I had a quick layover there. And so it's very clear that there is a retail awareness and interest in crypto that is markedly different across Asia than it is in the US. And to not be here and to not be a part of that would be missing out. And I think as Pete rightfully points out, crypto is a global phenomenon. We are global businesses. We have to be here.
Sure.
You know, and I'd make one more point. We're spending a lot of time in the US kind of wringing our hands and waiting for the big institutions to come in size.
Right.
And that's happened a little, right? And there are big university endowments and others that are kind of toe in the water, frankly. But there's a potential. I'm not saying that's the base case, but there's a potential that as we wait for regulatory clarity and for a lot more comfort around how to custody private keys, et cetera, from big institutions, as we're all waiting for that to happen, this thing in Asia continues to grow and grow in a meaningful way.
Right.
So we'd be crazy not to be here.
Sure. So Vincent, where are you seeing the majority of demand for custody services coming from? Is it coming from primarily crypto funds, crypto native funds, or are you seeing is it a mixture of general funds that are trying to diversify into crypto or sort of put their foot in the water, so to speak, into crypto? What's really driving demand for these services?
Well, for legacy trusts, I mean, we're a traditional company that has been focused on traditional assets in the past. And again, crypto and digital assets is just another form of assets for us. So the demand itself, I think it's coming from a lot of like OTC providers, companies that need settlement. Another demand is coming from the digital asset security space. So for us, a lot of companies are asking us to hold the underlying asset that will be eventually tokenized. We see family offices are interested in investing. So these are sort of the types of companies that we are used to dealing with in the past, and we're comfortable, sharing sort of our experience with them and guiding them through, regulatory. There's AML, KYC. There's reporting, taxes.
So the fact that you've worked with a lot of these folks before in traditional assets, it gives them a bit more of a degree of comfort in exploring this new asset class that they might not otherwise have.
Exactly.
Okay, great. Pete, Sam, you want to take that question? Where are you seeing the majority of demand coming from?
So for us, Asia's been more of an exchange business than anything. It's been exchanges, OTC desks, and now some crossover from real buyers and real investors. As mentioned, our business is a little bit unique because we have a non-custodial wallet product that we sell to exchanges all over the world. So we like the position now that we're aggressively building out our traditional custodial product, regulated custodial product, because we have kind of an end-to-end solution. We are finding now that these exchanges also want to store in deep cold storage and do that with us. But
aren't a lot of these exchanges building their own vertically integrated custody solutions?
Some are, but less than you would think in our experience.
Okay.
So I'm always surprised by how many folks show up at the door with a brand new exchange idea. I think it's already quite crowded, personally, but that's been the lion's share of our business so far.
Sure, sure. Sam, you want to touch on that, Sam?
Yeah, sure. Today, Coinbase Custody services about a dozen clients across Asia. Most of those are actually here in Singapore, so our current client base is what we would call asset issuers. So these are the actual teams building new blockchains, building new tokens. They typically have large treasuries. Some where those were raised in sort of the ICO boom of 2017. A lot of that was right here in Singapore. So we'll help them. We have a bunch of services to help manage those treasuries for those groups. So that's been sort of where we've been servicing clients so far. What we look forward to is the family office and high net worth segment that I alluded to earlier. That's where we see most of the crypto today. We see a shift of awareness that self-custody is probably not the smartest way to be storing large amounts of crypto assets, especially as you think about things like inheritance and stuff like that. And so we're going to bring the same custody solution that's worked really well for us in the States and in Europe here to service those segments.
Sure, sure. So we've heard a lot. There's this narrative out there, and we've heard a bit of it earlier today with Jeremy Allaire up here, that Asia is becoming kind of it's like the forward-thinking region when it comes to crypto assets. And I guess to what extent does that mean basically like light on regulation, kind of vis-a-vis the United States market? Like, would you agree with? What's your take on that statement? Is Asia really kind of the forward-thinking region, or is it really just a matter of like Pete was mentioning earlier that this is where the most immediate use cases lie, so there's just more organic interest in these products? Vincent, you want to take that?
Well, I think Asians are really innovative, and being light on regulation, I have to disagree with that. We have money service operators that are not allowed to deal with cryptocurrency. So by being forward-looking and being light on regulation, I really don't think that there's a connection there. But because of what Pete had just mentioned, there's many unbanked people in Asia. So Asians have to be very creative and to find different solutions. And digital asset is a solution. And I think that by providing a proper custodian service for clients in Asia, this is a way that they can actually be major players in their industry.
Sure, sure. Pete, you want to tackle that?
So when I was here in a former life, one of the pro bono things I did was the foreign exchange. I sat on the foreign exchange management committee for the Monetary Authority of Singapore, and I can tell you, they don't do anything light. It is not regulation light. Look, I think it's simple. I think Singapore's is run brilliantly as a nation, and they innovate, and they're getting in front of what is a tidal wave. I think Japan, surprisingly, is doing the same thing. In a lot of ways, from where I sit, the U.S. better figure it out, and soon. The U.S. is somewhat paralyzed politically right now in every way, right? In everything that happens in the nation. So it's not a surprise that this is a difficult time and a difficult time for the U.S. to lead, but I don't believe what Asia's doing is regulation light at all, and I think the U.S. is already behind.
So Sam, your take on this idea that Asia is just kind of the Wild West of crypto, is that, would you agree with this, with what Vincent and Pete were just mentioning, that that's a bit of a deceptive or inaccurate perception?
Yep, strongly agree with both of Vincent and Pete here. Only thing I really have to add is I think the MAS is going to lead. I think they're capable of leading. I think they are interested in leading. We have the Payment Services Act coming out next year. I think it's going into effect maybe January or February, which is going to provide some clear guidance for exchanges here in Singapore. I expect to see more following on from that. And that's exciting because, as Pete pointed out, in the US, we have a lot of unclarity.
Sure, sure.
Can I maybe just add that digital asset in Asia, if you think about light regulation, there's not as many independent qualified custodians in the digital asset space in Asia. So this is a very, what we call borderless industry, but defined by borders.
Right.
So if you look at Indonesia, you look at Malaysia, where there's really no custody service providers in those countries. You see North America, there's several good custodians, but in Asia, I think Legacy Trust stands out because we are regulated. We understand the different regulators we have. I mean, we're more regulated because there's 4 or 5 regulators that we have to deal with on a day-to-day basis in Hong Kong.
Right. So on that point, one of the big criticisms or one of the challenges that folks face in North America is that every state has their own regulatory regimes, and you have to go apply for 50 different licenses, et cetera, in the U.S. And I wanted to ask about what type of kind of jurisdictional and market fragmentation issues do custody providers face in Asia? Like if Vincent, you're based in Hong Kong, how easy is it for you to spin up a subsidiary and offer services in Indonesia or in Singapore?
Well, we're a very global company. We onboard clients from many parts of the world. I guess the question is whether or not can we, should we. But as far as onboarding clients, yes, we can onboard Indonesian clients. And I just want to also mention that our structure, because of our traditional background, we cater to common law, civil law, and Sharia law. So we understand the different types of people that wants to get into this space. But we don't go into that jurisdiction to promote. But as far as onboarding clients in other jurisdictions, yes, definitely.
So there's not necessarily a huge difficulty of entering into a new market in the APAC region.
No.
If you're to enter into a new market, or if you're already established in one region, it's fairly easy to migrate that into a different country. Is that what you're saying?
Legacy Trust has over 20,000 members in our traditional pension trust, and most of these members are from different parts of the world. So we dealt with QROPS, which is from Europe. We have European clients from France. We have Japanese clients, Korean clients. So taking that and implementing it into digital asset custody, yes, it's definitely something that we can add value to.
Right. So BitGo, Coinbase, obviously newer entrants to the market than Legacy Trust. How are you guys tackling the market fragmentation issue, or is this even, compared to what you deal with in the U.S., is it really an issue at all?
So Vincent and his team have clearly put some hard miles in. So I think they're more qualified to answer the jurisdictional question than we are, candidly. We're lucky because we have an ability to arrive in a market and lead with a product that's non-custodial, a non-custodial multi-sig hot wallet product that puts us into the conversation without having to really do the work to understand what the jurisdictional realities are.
Right.
And then we can work through that as that market grows. So, and arrive with a fully baked custodial solution that's regulated. So that's kind of how we've entered the region. And the reality is in Asia, and I agree with Sam, it's changing and changing quickly, but the bulk of the business has been not a qualified custodian business so far.
Sure. Sam?
I think Pete sort of nails it there. There's really two questions I think that you're asking. It's how do you come at a bunch of different countries from a licensing perspective, and then how do you service clients that have bespoke needs across this whole region on sort of a jurisdiction by jurisdiction basis. And so on the licensing front, Coinbase Custody today onboards customers probably just like Legacy Trust on a cross-border basis across many countries in Asia. We are actively exploring licenses in Singapore, Hong Kong, Japan, many of the sort of leading financial hubs. Some of those we'll bring to market, some of those we won't because it won't actually make sense. But a lot of the demand that exists today isn't actually looking for a licensed custodian. Some of it will be in the future, especially as some of that regulation becomes more clear. The other question, how do you service a really bespoke and diverse set of client needs across this region? The way I think about that is, coming from the US, we have to start with the real hub. So again, that's probably Tokyo, Hong Kong, Singapore for us. That's one of the reasons we're excited to be here this whole week. Get some people on the ground here, get some offices spun up here, and make sure we have just the right amount of resourcing to actually go talk to clients and understand their specific needs, whether that be in Indonesia, Philippines, Japan, wherever that might be, and then start to tailor our service a bit to them. We expect this is going to take a long time for us to really sort of make our way throughout the region, but it's something we're really excited about.
Sure, excellent. So kind of pivoting a little bit here to just the question of custody business models, and I wanted to ask Vincent in particular, because you guys actually have an announcement, you're spinning off from Legacy Trust, you're spinning off actual digital asset custody business. Would you want to elaborate a bit on that? Like, what's the impetus for that decision? How does that, why is that important?
Well, yeah, thank you. Legacy Trust is announcing that we're spinning off into a pure digital asset trust. And the reason why is that it's a very different business model that we're in right now in Legacy, focusing on traditional assets, focusing on the old-fashioned 19th century trust model. And digital assets is a very different business model, which involves technology. So this is something that I think is needed in Asia. We need to build a trust that can keep up with the Joneses here, right? That is heavily technology. And we're really happy with our partnership with Ledger. And I think that, that's going to expand. We're very excited to see the, I don't know, it's just the opportunity that we're going to call it First Digital Trust. I mean, there's a plug here, so.
And then you guys also recently launched a digital asset pension offering. Is that, explain how that works, and is it, I guess the point I'm trying to get here, broader point I'm trying to get at here is, how important is it to have a diversity of service offerings aside from just storing digital assets from a revenue perspective?
Well, I guess if there's demand, there's revenue that follows, right? But as far as pension, this is our forte. I think the old saying is you got to stick to what you know. In Hong Kong, of course, Custom Excise has publicly came out and said that digital asset is a form of virtual commodity, is a property. We've dealt with commodities, we've dealt with security, we've dealt with currency. This is our day-to-day operation. So as part of a digital asset, putting it into a pension is no different than somebody putting, their house into their pension. And because we're a very global, forward-looking company, we onboard, residents living in different parts of the world, providing them pension. And of course, also pension is a way of preserving wealth. The old saying again is, it's not how much you make, it's how much you keep. And there's always somebody reaching into your pocket, and a pension is a great way of preserving that wealth.
Great. Pivoting here, just want to make sure we get all the questions in. So recently, the FATF, Financial Action Task Force, came out with some new recommendations that many crypto exchanges are going to need to abide by, intended to prevent money laundering and terrorist financing and this sort of thing. And this has obviously been kind of the news of the summer in certain circuits of crypto. But I wanted to ask, how does this impact custody providers? It's obviously the most immediate impact would be on the exchanges, but given that exchanges are some of your customers, some of your largest customers, how are custody providers, or what are the implications on custody providers of these FATF guidelines? Pete, you want to take that?
I mean, I guess the short answer is we don't know. It's a tricky thing to even try and wrap your head around. I guess there are solutions that are kind of global encrypted API solutions that could be constructed, et cetera, but we're not leading, candidly. We're monitoring and we're trying to figure out what the industry convention will likely look like. Oddly, BitGo had built an encrypted BitGo to BitGo client API that could solve for this problem some years ago, which hasn't really been deployed. But it's a slippery slope. When you talk about hacks, and then you talk about sending hot but encrypted metadata of someone's kind of entire stack of data around the world, that's a scary thing to us. So we're going to monitor and wait and watch and be ready to react when the time is right to react. It's not clear to us that time's now.
Sure. Sam?
Coinbase will help lead. I think our understanding of what the FATF said is crypto needs to be regulated like banks, but they're not giving guidance on how to actually do that. So it's up to us as an industry to figure out what is the right way to bring confidence, to bring transparency to crypto, but to do that in a way that is compatible with crypto. If we recreate Swift, we might as well just all stay on the banks that we use today, and not really take advantage of crypto. So we don't know what that solution is yet, but I know our chief compliance officer and a number of folks at Coinbase are thinking hard about it.
Vincent, you want to tackle that?
Well, for me, I guess this is where the the age comes in. I mean, you guys, we've been preparing for regulations, reporting.
Did you just suggest that I'm younger than you? That's the first time that's happened in crypto.
Yeah, actually. Well, the reason why is, look, we're a FATCA compliant, and we're also CRS, Automatic Exchange of Information compliant. What that means is it's FATCA on steroids. We deal globally. All of the OECD countries are, their memberships, there is reporting. So this is what we're bred and trained to do, is prepare, structure our business for our clients. So when the Financial Action Task Force, its guidelines, we're actually, prepared. We're more than prepared, because I don't think it's going to be as strong as the CRS reporting.
So this is not going to be that much of an extra burden beyond what you're already doing, essentially, or this might even be.
Yeah, I mean, we came in from the other way around, from BitGo and Coinbase here. Where we came from is on all of the legal side of things. I mean, technology is sort of our weak point. That's why we use our friends at Ledger. So, but structuring, reporting, all of these things, that's the system that we've been building, not storing. So we protect assets, but we also protect the owners of the assets.
Sure.
But the amount of data that they're suggesting and the way that happens isn't going to be a manual process. So we're all going to end up involved, but it's going to there's a road to hoe here before we all understand what that has to look like.
Sure. So Pete, you obviously just joined BitGo about a month ago from Xapo.
Yes.
And also over the summer, Xapo was acquired by Coinbase custody, or is in the process of being acquired by CoinDesk custody. So I guess my question is, how do you see, is this a, or how is this market how do you expect this market to continue consolidating? And maybe what does that, is that a positive sign of maturation? Is that a sign of, or what does this mean for the Asian markets essentially as we see broader consolidation in the custody business?
So personal view is a couple things. First, digital custodian was a misnomer for years. We were vaults. We all called ourselves custodians because it sounded good, but the reality is we were vaults. When you compare it to the services provided by a real custodian in other traditional markets.
So you're saying that just storing your keys in a vault in a mountain in Switzerland
State Street for years has done many, many things and provided many services to their clients in sec lending, prime services, fund administration, secure and regulated settlement, et cetera, that crypto custodians did not provide. Crypto custodians were largely vaults. Coincidentally, a State Street is unlikely to be a vault for your gold. They're going to hire somebody to do that. That's changing rapidly. We are all working on the same things, which is providing a full stack of services where you can take advantage of this asset in a way that you're not just paying a fee to store it somewhere. And I'm of the view that some people that are traditional kind of hodlers where security comes first will pay for that storage. And through that kind of stack of client types, others are going to use their coins to not only earn but help offset the cost of what those storage fees would otherwise be. So we're all trying to build that out. We're all working hard on prime services businesses to build that out. We're friendly competitors, all of us, but we're in a race for AUC because AUC is going to be the currency that is needed to drive these businesses as we build them out. I think that continues. I think that continues apace. I think that those that can really generate AUC in a meaningful way will set themselves from the pack.
Right.
Obviously, that gets harder as prices go higher, right?
Sorry, I just want to let Sam offer his comments. So we got 1 minute left. So, Sam, acquisition of Xapo, how does that change the game for you guys?
It changed the game from an AUC perspective, exactly as Pete mentioned. Xapo was pretty incredible in that it was this client list that kind of came together years ago of some of the most preeminent Bitcoin investors of all time. And thinking about those clients and their assets, it's unlikely something like that will ever exist the way it did before Zappo. Zappo was sort of the predecessor to all of us up here. So in that sense, it's an absolute game changer for Coinbase custody. It has vaulted us to become the world's largest crypto custodian by AUC. And it's opened the door to a bunch of really prestigious clients.
Great. All right, Vincent, predictions in 12 months, Invest Asia next year. What is the crypto custody landscape going to look like?
Well, first of all,
one bold prediction.
First Digital Trust will be sitting up here talking about custody.
Anything more daring than that?
There's going to be some major players. We've seen a lot of new big companies now challenging custody, as we know. Facebook, JP Morgan. So these guys they're coming.
All right, Pete, Sam, one hot prediction.
I think U.S. regulation is slow to come, and therefore U.S. institutions are slower to come than we expected. But I think as that happens, Asia becomes the most important, continues to be, and develops even more importantly into the most important crypto region in the world, and leads from both a regulatory perspective and a development perspective.
Yeah, I'll add on to that. I think the most important trend for Asia in particular will be the advent of many, many more licensed asset managers, licensed hedge funds, licensed portfolio managers that are going to require licensed custodians, and that will open up crypto to a whole new class of investors that haven't really been able to get in those types of products to date.
Great. Well, we're over time. Thank you so much, everyone. Vincent, Pete, Sam, thank you, everyone, for hearing us out. Hope you enjoy the rest of the event.
Thank you.